Hello, everyone, and welcome to Civic Platform. This is your host, Zuher Almusre. Today, we will learn how to buy a business in Canada. This topic is very important for all of us, especially who want to buy a business but he didn't or she didn't have any information how to start or from where we should begin. So let's watch this episode and we will find out how to buy a business in Canada.
Hi, I'm Pamela LaBelle, and I'm the founder of the Business Exchange. And I want to thank you for joining us today on our webinar on how to buy a business in Canada. And we're going to have a whole bunch of guest speakers to join us so that we can learn about all the professionals that need to be involved in your business buying journey. But first, I have Chris here with me from Business Exchange. Hi, Chris.
Hi, Pam. How are you today?
I'm good. How are you?
I'm good. Thank you, everybody, for joining. This is going to be one of many webinars that we're going to be putting on. If you're in the chat right now, maybe write in where you're from. If you have any topics that you want us to cover in the future, definitely drop that there in the chat. And we'd love to put together a nice webinar for some of the subjects that you guys want covered. What's on the agenda today, Pam?
Okay, so I'm going to do a little bit of speaking on why buy an established business versus a startup. I'm going to talk about where you can find businesses for sale and if entrepreneurship is right for you. After that, we're going to be joined by Armin Arzumanian. He's the #1 business broker at Home Life. He's with Home Life Response. And he's going to be talking to us about the benefits of buying a business with a business broker. Then we're going to hear from Tyrell Feroz. He's a CPA from MNP, and he's going to talk about the financial considerations, your financial due diligence when buying a business. And then we're going to hear from Rashesh Mandani from Mandani Law about the legal due diligence process and what's involved with that. We're going to hear from Sean Allen about getting funding. Sean is from Matrix Mortgage, and he can help people get financing for businesses. And so many of the businesses that are for sale, whether you get a brand new one or an established business, a lot of them are franchises. So we're going to talk with one of the franchisors of the benefits of buying into a franchise system. We're going to hear from Meltwich Hospitality, which is one of the fastest growing franchise brands in Canada. We're going to talk to Ryan Hillis from Meltwich Hospitality about that topic.
Okay. Thanks, Pam. And a lot of questions. I get this one a lot, so I'm just going to pose a few questions. A lot of people ask me, why should they buy an established business versus a startup business? Maybe you can tap into that.
There is a big difference between startups and established businesses. Startups are extremely risky. The stats that I've been reading online have been telling me that 90% of startups will fail. So that's not a really good, it's not a good return on your time or your money. So startups are extremely risky. So a lot of people want to reduce that risk, and how you can reduce the risk and still be an entrepreneur is buying an established business. An established business will have a proven track record. From day one, you'll be able to get your key, walk in the door, and automatically have customers, have suppliers, have employees, have sales. And that gives you a lot of security. You know what to expect. Also, on these kind of deals, it's a heck of a lot easier to get financing. You can either get financing on equipment. You can get a vendor take back where the previous owner is going to finance part of the business. And of course, you're going to get training from the previous owner. He's going to train you on how to do things in the business, how to run the business. He's going to introduce you to the vendors. He's going to you'll get to interact with him and the employees, and how he runs things, on the customer side of things and what customers are used to, because everybody wants things to run exactly the way they were before. We kind of saw during COVID how our lives had changed and how people really did not like change. And from the customer side, from the employee side, and probably from the vendor side too, everybody wants things to be consistent and the way they were before the acquisition.
And I know, speaking on consistency and systems that get put in place, I've been working with you for more than 10 years now. And you've always talked about one book in particular that's helped you over the years in running your successful business. What book is that?
So I highly recommend that every business owner read The E-Myth, The Entrepreneurial Myth by Michael Gerber. And I'm just going to share with you my screen. This is the book that I'm talking about. The E-Myth, The Entrepreneurial Myth, Why Most Small Businesses Don't Work and What to Do About It. And really, the gist of this book is about creating systems in your business so that it doesn't matter who's doing the role. Everybody knows how to do it. And customers like consistency. It's not so much, the biggest restaurant chain in the world, McDonald's, is, it might be my personal preference, but I don't think they make, and they're not known for making the best hamburgers, but it is consistent. And it doesn't matter if you're going to McDonald's in Toronto, or if you go to McDonald's in Paris, France, or Houston, Texas. Wherever you want to visit a McDonald's and order a Big Mac, the Big Mac is a Big Mac. And that's what makes customers happy, is that it's their expectations, and that their expectation should be consistent and be met every single time, no matter which location or who's making the Big Mac. It is always the same. So this really touches on creating systems and why it's important for your business to succeed.
And I know sometimes people have a hard time finding the right business for sale for them, there could be a variety of reasons. But why can it be so difficult to find a business for sale that might be right for someone?
So this is a good question. The reason why businesses are the marketplace is hard to find. Now, I started the Business Exchange 24 years ago. And it was because I was looking to buy a business and I couldn't find the marketplace where businesses were being bought and sold. Now, of course, things have changed in the last 24 years, but really it's finding the marketplace, because you will not see a restaurant, or rarely will you see a restaurant with a sign for sale sign in the window. Business owners that want to sell their business are like, don't tell anyone my business is for sale, but I want you to sell my business, when they're dealing with a business broker. So it's kind of like a secret underground market where people want to know these business opportunities are available, but the owners don't want it to leak out to the general public, to their customers, to their employees, to their vendors, that my business is for sale. So, you'll rarely see a sign with a business for sale. And why is that? I mean, do you want to go eat in a restaurant where there's a sign in the window that says it's for sale? Most people don't. And then the employees will feel insecure. Do they have job security? If there's a new owner, when there's a new owner, are they going to keep me on? Are they going to let me go? And the current owner doesn't want to lose all their staff. They still have a business to run until that closing date. From the vendor side, nobody wants to have credit and then get their credit taken away and everything be, all the goods and being delivered are on a COD basis all of a sudden. So we really want to make sure that it does stay confidential until the time comes to close the deal.
So if that's the case, then where could somebody find some really good opportunities?
So that is exactly why the Business Exchange exists. The Business Exchange magazine, we started out as a magazine 24 years ago. The magazine's still going strong. Print is not dead. But the magazine itself gives people an idea. So many of the buyers are new Canadians, and they don't know how much businesses cost, how much businesses sell for, what they can afford, what they can't afford, and just to get an idea what's available in the marketplace. So the Business Exchange magazine is a great place to start. We'll send you a link if you'd like a free subscription to get the magazine delivered to your house. We can send you off a copy and you can go through it and you can get ideas about businesses that are for sale. Once you narrow down your idea of what you want, which industry you want it in, your price range, then you can go onto a website like the Business Exchange website, and you can actually do a search. And then you can narrow it down and only look at the businesses that are matching your criteria. You'll also see the top business brokers that are specializing in this industry. So you might want to reach out to them. I think, business brokers bring a lot of value to the marketplace. And we'll talk to a business broker shortly about the benefits of using a business broker in your buying process. So that's a great place to start. Also, I would go to franchise shows. Franchise shows are amazing. They have seminars going on from opening in the morning to late in the afternoon, where you can learn all about buying businesses, buying franchises, meeting with accountants and professionals. So I always recommend going to the franchise shows. If you want a free ticket to go to the franchise show in your area, you can go onto the Business Exchange website. We have a section on there that has franchise show tickets. September, the franchise show season starts, and there's franchise shows going on right across Canada and in the United States for that matter. So if you like a ticket or see the schedule that's going to be happening, then I would recommend going onto our website and downloading your free ticket. Otherwise, tickets are usually about $10 at the door, give or take, depending on the city. So going to the franchise shows, that will give you an opportunity to get your questions answered very quickly. The problem, or what takes so long in finding the right business opportunity, is usually just connecting and speaking with the business broker or the franchisor. Getting two people on the phone today seems to be, a big task. So, if you're meeting face to face, you can meet with maybe 100, 200 brands and get your questions asked. You can meet there with franchise lawyers, accountants, finance people, everybody under one roof, and gather so much information in an afternoon. So that part is super efficient. So, and of course, business brokers. Business brokers have so much information. They also know about what's about to come onto the market. So you'll get even more information than you can from a business broker that specializes in your industry.
And I think when somebody's looking to buy a business, before they're even at the stage of maybe going to a franchise show, first they have to ask themselves the question, is entrepreneurship right for me? Can you talk a little bit about that?
Yeah. You want to look at what your core competencies are. What are you really good at? What are you passionate about? What do you really enjoy doing? So let's face it, business owners are not 9-to-5ers. Business owners are working long hours. So you better enjoy what you're doing or you're going to hate your life. So, and you really want to match your skill set with what you're really good at doing and what your passion is. You also want to look at how good are your managerial skills. You're going to have to, I don't want to say boss people around, but you're going to have to give people direction. You're going to have difficult conversations. You're probably going to have to fire people. And a lot of people don't like that. That's not the part I like about my job, but you're going to have to do some things that are going to make you grow and move outside your comfort zone. You want to look at what your commitment level is to growing this business. If you only want to work part-time, if you only want to work 5 hours a day, or maybe you have a young family and you have kids that are, kids are demanding, you may not have the time to put into this business to make it succeed. You also want to make sure that you have enough working capital. I see so many businesses fail, not because they're bad businesses, but because they don't have the working capital behind them to make sure that, they can they have enough cash flow for the next year, 18 months, 6 months. So many times you see a great restaurant that never had the opportunity to take off. And that was just because they didn't have the working capital. So look at your finances, see how much money you have to invest, but it's not just making the initial investment. You also want to make sure that you have enough working capital just in case, because we just came through a just in case scenario. I mean, we just came through COVID, and businesses were not able to run the way that they're used to running. You also want to look at what kind of family support do you have? Is your partner supportive of you? Are your parents or your kids, whatever your situation is, do you have their support? Because nothing worse than if business is tough, if things do not go the way you planned them to go. Is your wife or your children going to suffer? Because, you have to make sure that everybody is behind you and that you're all in it together and you all want it to succeed. So you don't want to come home and have somebody saying, oh, I told you so. This was a bad idea. This is not going to be helpful for an entrepreneur because, like anything in life, business is up and down, up and down. We have great times in business and we have hard times in business, and you want to make sure that you have that support.
Okay, nice. And I know we have our next speaker coming up right now. If you just want to do a quick little introduction.
Okay, so right now I'm going to bring on Armin Arzumanian. He's the number one business broker in the home life system, and he's with Home Life Response Realty in Mississauga. And he's going to share some insights on some of the benefits of using a business broker in your business buying journey.
All righty. Thank you, Pam. And we'll move on to our next segment.
Thank you. Hi, Armin. Thank you so much for joining us.
Good morning, Pam. I'm glad to be here. Thank you so much for inviting me to this.
Okay. So everybody, this is Armin Arzumanian. He is a business broker from Home Life Response Realty in Mississauga. And, a lot of people don't really understand what the role of a business broker is in the buying process and what some of the benefits are of buying a business with a business broker. So I thought I'd bring on a business broker. I know you've been in business for, I think it's been 26 years so far. I think we started around the same time. And actually, this is one of my first customers that started with me back in, I believe it was 1999. You started advertising with the Business Exchange. So
yes, it's been a long relationship with Pam and a very successful one for both of us. It's been great. It's been one of the best investments from our side. Business Exchange has been a very, very key factor in, introducing a lot of buyers and sellers, and it's been very successful from our end of it to the business also.
Oh, I'm so glad to hear that. So what are some of the benefits of buying a business with a business broker?
The most important thing, one of the key issues with a business broker is we specialize in businesses and buying and selling businesses. Fortunately, in the market, there's a lot of, real estate agents involved and other people involved that they consider themselves as experts, but they sell everything. It's very, very difficult to be an expert in everything that you do. And our specialty is, evaluating the businesses, being able to tell the buyer, what the, risks are involved, what the information that we can provide for them. The biggest thing, evaluating, analyzing the paperwork with it, that an average real estate agent who's finished and selling residential real estate, it doesn't have the experience and the knowledge to provide this to the buyer.
And, I get this all the time. We have people calling in, realtors that specialize in residential that have their cousins listing, their friends listing, a relatives listing. And when they have this business and they don't know what they're doing with it, they can't walk in and say, yeah, this is what this business is worth. They don't know how to look at the financial statements, and they don't know how to look even at something simple like the equipment in the business. And that causes a lot of, like, let's say it's a restaurant, or it could be a dry cleaning business. This could be outdated, non-efficient equipment, or this could be state-of-the-art equipment. How would you know if you're not a specialist in that industry?
Yes, I mean, it's very, very important. It's a big factors involved, like the equipment, cattle. It brings in the financing options in. If there isn't enough value to the equipment and the leasehold in a business, it's very important for the buyer to know that it's not a financeable business. So you can't start the process looking at a financing when right off the bat at the beginning, that the bank's appraisal is not going to be sufficient enough to, for them to give you any kind of a loan on this. So, it's very important to let the buyer know right at the beginning of the process that this is not going to work. And that's what we do. I mean, like, fully disclose all the information to the buyer from the beginning. So it's better to spend 10, 15 minutes discussion over the phone and making sure the buyer is aware of all these things, rather than you go through all the process of preparing and everything else. And as you said, a residential agent doesn't know this. They think it's mortgage, it's the evaluation. Every house has certain value, but some businesses have no value, a financeable value on it.
Yeah. So, I always recommend people go with a business broker and one that specializes in the niche that they're looking for.
In the last 3-4 months, I've had real estate agents who own businesses, and they have called me to list and sell their businesses. They're in the business and they own, as a investment, they've bought side businesses that they're involved in. And unfortunately, the MLS system is the biggest positive thing for residential, but it hasn't done that well for, business brokerage and that part of it. And said, Armand, this is not our area of expertise. We own this business, but please come and evaluate it properly for us and help sell it.
Yeah, you really need an expert in the field
on this, And we always represent the buyer. So, there is always, full disclosure involved regarding the information. And we just follow up from the beginning to the end of the process with them.
Okay. And what about negotiating the deal for them once they find something that they're interested in?
The most important thing is 100% disclosure in our process. So to do that, you have to structure the deal right from the beginning to be able to give the buyer that chance to do that, right? So there's a lot of cases that we represent the seller also, but in the buyer's case, all these 25 years that I've been in the business, there's been never a case that the buyer is not aware of all the detailed information regarding this business, whether it's documented or not documented.
Okay.
So main jobs is to make sure that the buyer goes through the day-to-day operation of that business to get to feel, to see, to get the connection to that business, and then make his final decision. Majority of the time, again, we analyze the financial documents, the tax returns, or the profit and loss statements, but there is some issues that the buyer has to be present physically in the business. And when they're there, we analyze everything one more time together, and then we come up with a decision whether this is the right fit for them. Do they want to go forward with it or not? Now, you have to prepare the offer to be conditional based on all this. So the buyer has the options of, renegotiating, walking away, and we make sure all these, options are with the buyer, which is a full 100% protection, other than the clauses regarding the lawyer, his lawyer looking at it, or his accountant doing the due diligence on it.
Okay. And so do you help introduce them to those kind of professionals? Is that part of the role?
Well, I mean, we have, introduced, like we usually give 3 or 4 names. Majority of them, the buyers have already worked with certain lawyers and accountants, and they work with also. And there is a majority of the time is the referral from other colleagues that they have, or the friends or people they know already that have done businesses and they've worked with certain type of lawyers that specialize in this. We can, give them a few names that they can try, but majority of the time they have their own lawyers that they work.
Okay, great. And so if I decided I want to go look at businesses, I think actually one of the huge benefits of dealing with a business broker that specializes in a specific niche is that they already have like a pool of businesses that are listed for sale, or they know it's going to be coming up on, in the near future, this new listing, this new convenience store, that you always have a pool of sellers that you're working with. So you may, if you're dealing with buyers in that niche, you may even be able to bring them to something that is not even on the market yet.
That has been exactly the case for us. We have a pool of anywhere between 40 to 60 inventory of businesses that are listed with us. The reason behind our success for the past 25 years has been that we represent a lot of sellers. So they're all under contract with us. Your magazine has been a key factor on it when they look at your clients. All the listings that are advertised in our website and your magazine they're all under contract with us. So we have a pool of all these businesses are for sale. One of the biggest advantage that all our buyers have had with us for the past 25 years is when we represent the seller and we have contract, we have 100% full disclosure from the seller side also. So all the information that is given by the seller and we representing the buyer is fully disclosed to the buyer. And majority of the time in the business brokerage deals, the deals happen if there is full disclosure and the buyer and the seller are full aware of all the small details on it. When there's other brokers involved, sometimes it becomes a bit more difficult, for disclosure side. So that's why it's been a great success story for us regarding the number of businesses that we've sold, number of deals that we've put together, because of the pool of inventory of businesses that we have. And we have a cross section of everything. And we specialize in retail, small businesses, whether it's a Benjamin Moore paint shop, hardware store, coin laundry, convenience store, grocery store. Everything is really, we have a good cross section of everything on all these businesses.
Okay. So if I decided that I wanted to go with a business broker, how would I go about choosing one that would be right for me?
Again, the number one thing, in my opinion, is you work with somebody who specializes in a certain section or a niche market that they have, and you can see that easily from their advertisements. If got 20 Popeye franchises or Baskin and Robbins or areas like that, or a Boston Pizza or a Rabba franchise or a Hasty Market franchise or any of these. So the area of specialty is there. So you don't want to go and ask for a aluminum manufacturing company for him to do that. Not that he or she can't do that, but that's not really the area that he specializes. So even in the business brokerage section, there is subsections, if you want to call it, that it exists. And the biggest factor for me is the trustworthiness and the feeling comfortable, being on the same page with a person.
Yeah.
After our first contact with the phone call, we both parties have to feel comfortable with each other. I mean, they come to our office, we sit down, and it's a personal relationship again. It becomes, because in order for a deal to close, the buyer has to feel comfortable to disclose all the personal information to us, so we can sit down and say, listen, Joe, John, we cannot do this much financing for you, or this is not the right business for you. If never been in a business that needs 65 hours of commitment from you a week with you or your wife or the family, and you think you're going to buy this business, sit at home because you invested $500,000 and the checks are going to come in, maybe this is not the right business for you. And those things are explained right at the beginning, in our case, in our client relationships.
Yeah. Well, I think buying a business is one of the biggest investments that people are going to make. So you want to be surrounded by professionals and people that you trust. So, we all know that real estate agents and business brokers, they are working on a commission, but we want to make sure that they're acting in our best interest when we're looking at making such a huge investment. So trustworthiness is, so important to making this transaction happen.
For sure. And it's been a long-term relationship. The majority of our business, I've been in business for 26 years, as you mentioned, and I would say 80-90% of the business is referral. And it's, old clients that we've sold businesses for them. And, they refer us to other people who they work with, or the people who have bought businesses, 1, 2, 3 family members. That it's been an absolutely, the advertising through Business Exchange, the number one in that department, plus the referral end of things.
Okay. So if I wanted to use a business broker to buy a business, how much what does the fees look like for a buyer?
Oh, there's no fees involved. When we represent the buyer, there's absolutely no fees involved. All the fees are negotiated through the seller, so it's part of the pricing that it's that the business is sold for. So there's no fees. The fees involved would be for the buyer, would be the lawyer fees that he has to be involved, closing the deal, and any fees associated with the business purchase. Again, we specialize in negotiating, and the leases, the franchise agreements, but those are all done through the process of buying the business. But the actual buyer, there's no fees for the buyer to the business broker.
Okay. I think these are really helpful tips for our audience. Is there anything else you want to add? Because I think those are all my questions.
Oh, no, that's great. It was very nice talking to you, Pam, and I hope it was helpful information going out. And I just wanted to say that anybody who really wants to buy or sell a business, the Business Exchange has been the biggest route for everybody, and we are right there with you.
Okay, thank you. So at the end of this, we're going to send out a replay for this video, and we'll include your contact information if anyone wants to reach out to Armin Arzumanian. He's with Home Life Response in Mississauga, and we'll send you all his contact information at the end of the webinar. Thank you, Armin. Thank you so much for your time.
Thank you very much, Pat. That was very nice.
Take care. Bye-bye. So I'm being joined with Tyrell Feroz. I hope I'm saying your last name correctly.
I respond to anything close.
Okay. So Tyrell is a CPA and a CA from MNP. You can see the MNP logo right behind him. So he's basically an accountant, and he's going to give us some information about the due diligence process when buying a business. And I know the number one question, and it always comes up, and it comes up at franchise shows and every event that we go to. The number one question is like, what is this business worth?
That is the first thing, whether you're on the buying side or on the selling side of things. I always get the question sort of, what is my business worth? And everybody has an idea inside their mind. If you're a business owner, you certainly have something in mind that you think that your business is worth. But there's a lot of factors that go into the valuation of a business, and every industry and every different type of business really has a different type of valuation that you get into. So there's rules of thumbs in different places that you'll see, and you'll see them online. If you type up business valuation, you'll see various different rules of thumbs. But it's really important to have somebody who's qualified to really have a look at your business and see what the true value of it is going to be worth.
Okay. Another thing, I guess, during the disclosure process, what kind of things does an accountant review? So, why would someone want to invest the money into having an accountant review everything? And what would the accountant be looking for? And why would I want to make that investment?
So there are a lot of implications, whether you're purchasing or selling your business, that could have either tax implications or could have an implication on the value that you're getting for your business. I know in reviewing whether it's a share purchase or an asset purchase agreement, a lot of times there's various different, say, earnout clauses that may be included in the agreement that are going to have an impact on the timing of payments, as well as potential tax implications as to when taxes are due on the purchase or sale of the business. So we're definitely, when we're looking through those agreements, we're looking for any of the different items that are going to impact your value that you're either getting from the sale of the business or what you're paying for when you're buying a business. There's, whether you're buying assets, it could be a calculation of your future tax shelter that you're saving by getting the assets as opposed to the shares in a purchase. Or it could be, there could be a clause inside there for a lot of times what you see in a share purchase agreement is a clause for working capital. And so it is really what is the meaning of working capital in this case. And it could have an implication as to money that you could pull out prior to the sale, or what payments you're allowed to make for yourself prior to a sale, or what you're getting in the business when you do that.
So if I were to come to you and say, I found this business I'm interested in buying, which documents are you going to be asking me for?
So what we would typically want to see is obviously their most recent sets of financial statements, and it should have at least a 2-year comparative. We would like to see a longer year comparative so that we can start looking at if there's any trends or if there's any outliers inside the most recent year that may be skewing the numbers. Whether
like the pandemic?
The last 2 years certainly have, or 3 years, I guess, going on now, certainly have been different when we're looking at prices. It's certainly made our lives more difficult when we're looking at that. But yeah, so we'd like to see the financial statements. We do also want to see the most recent sets of corporate tax returns or the business tax returns. A lot of times there are, and we like to see the full tax returns, not just the general schedules. We want to see the full piece because we want to see if there are any carry forward amounts that may be beneficial on a purchase, such as if there are CDA balances or if there are loss carry forwards, or the amount of undepreciated capital costs of the assets for the purchaser. So those are the types of things that we like to start with. And after that, if there's anything that requires further investigation, we may even go to the general ledger and just to see what types of items are being put through various different accounts.
Okay. And, a lot of times there's, and I don't know if this is really for the accountant, but a lot of times there's a lot of businesses that are cash businesses. And, I think people want to get paid out on things that they haven't recorded necessarily on their books, but they still want to get the full value of their business. Do you have any comment about that?
Well, if we are on the selling side of things, I definitely don't want to hear about the cash that's going through. But no, it's really difficult to pay for something that isn't recorded. And certainly when we're helping a buyer out, if we're helping the buyer in purchasing a business, if the seller hasn't reported those sales, it's very difficult to tell the buyer that we're helping that he can pay for the price of those sales if they aren't recorded ever, aren't treated for CRA. And it opens up a liability issue as well, because if CRA ever does an audit and goes back and finds these unreported income or other items inside there, the buyer could be open to other liability as well. So.
Okay, so that's really something that a purchaser wants to be mindful of.
Absolutely. So, and certainly when you're looking at the share versus asset purchase or sale, that is something that the purchaser is mindful of, and why they typically would like to go with an asset purchase instead of a share purchase.
Okay. So, if you give me advice and you say, okay, you gave me the green light, let's go for this. How should I structure the purchase of the business?
So that really depends on an individual situation. And if you've already got pre-existing businesses that you own, you may already have a structure in place. And what we want to do is we want to look at the whole organization in order to ensure that, we have a shared small business limit between them. So we want to make sure we're not purchasing this in such a manner that's going to be to the detriment of one of your other businesses already. or any other party that may be involved in your other business. If you have family or if you have a spouse that may be involved in the business, we may want to look at how do we structure it in such a manner that we can pay out remuneration to everybody. So from a personal tax planning standpoint, it could be more beneficial to have it in one way versus another. We want to look at maybe if a family trust might be of benefit, if your children are of the correct age, or if you're needing to move money to other businesses that you own, or for liability reasons, for pulling out retained earnings, it may be more beneficial to have a trust. So it's really dependent on an individual situation as to what type of structure is going to work correct for you from an overall standpoint. And we really like to look at it from an overall look, not just the one-off situation.
Yeah.
It's more of a holistic look, which is, and why it's so different in every situation is why it's important too to have it looked at.
Yeah. So what other things should someone consider when buying a business?
A lot of things that tend to get overlooked are the soft things, or I'd refer to them as the soft things. So not something that you're going to find on the set of financial statements or on the purchase agreements themselves. And it can include, your organizational structure. So how is it going to look if you've already have a pre-existing business? How does this new business then integrate into your overall org structure? Are we using the same management to run various different tasks, or is there some redundant staff, or how does it work on an overall basis with what you may already have in place? And for those types of things, culture is also very important. Here at M&P, we have having fun at work as part of our values. And
At an accounting firm?
Absolutely. We're going to Canada's Wonderland tomorrow with our staff. So
Nice.
if anybody wants to come and see some accountants coming out of their shell, they can come there.
Okay.
So the culture is also very important, because you want to have like-minded people that you're working with, and not have those different values. And it can really have an impact at the end of the day on your bottom line if you've got the right culture and staff morale in place.
Yeah. And what about maybe taking advantage of some economies of scale, possibly with other businesses that you may own?
That certainly is an opportunity. I know specifically if you have maybe certain point of sale systems or CRM systems that you currently are running, you may be able to integrate a new business within those current systems that you own and eliminate a number of different costs. If you already have a sales team in place covering various different areas or geographic regions, you may be able to integrate your new product or services and use your existing people in order to sell those other products or services as well. So there's certainly some economies that you can gain through that as well.
Okay. So do you have anything else you want to add that might be helpful when someone's doing their financial due diligence?
It really boils down to a lot of times as well, a gut feeling. If you have that feeling inside you that something may be off, don't feel afraid to ask those questions. And certainly having an accountant, having your lawyer, having somebody look over those various different items. We see this on a regular basis, and I've seen a lot of various different sales and purchases and different things that can go right or wrong inside them. So we may be able to see certain telltale signs that you may not have seen before or be looking for. So getting the right advice is always the best way to start with.
Yeah. And I think even on when you're looking at the business, my dad, when I was a little kid, used to own a convenience store, and he wanted to see what goes on and what are the actual numbers and how many clients do they actually have. And you can do the math on the average sale. So if you don't 100% believe those financial statements are correct, you can go into the store. You can sit at a table in a restaurant and see how many clients are coming in and how many tables they're turning, or standing outside the convenience store and seeing how many customers are coming in a day. And that will give you a good indication. Are these legitimate financial statements that your accountant is reviewing? And it may be that you have to go there in person and do an audit on your own.
Absolutely. You know, if the type of business allows for you to do those things, certainly going and visiting, or, you know, if there's a large number of assets that are sitting on the balance sheet, you might make a site visit or a drive-by and you have a look and say, well, it says here that they have 10 trucks that they keep at their business, but I only see 2 here. So then it's, you know, it may be that they're off-site, and that's perfectly fine, but it's just a quick check just to say, okay, do these numbers actually make sense? Is what the owner telling me, does it make sense?
Yeah. And then following your gut after that. So it's not necessarily just looking at a piece of paper at a desk off-site, but sometimes it's like going in and checking for yourself and making sure that everything makes sense.
And the purchase or the sale can be difficult for the seller as well a lot of times. Sometimes it may be a family business, or it's something that they've poured their blood, sweat, and tears into for a large number of years. And so there's an emotional component attached to the seller in a lot of cases. And sometimes it's hard for them to see actual black and white as opposed to all of the history and emotional side of it. So, you know, I joke sometimes we're more of a psychologist or an arbitrator than we are accountants, but sometimes it does come to that as well when we're all sitting in the same room.
Well, I mean, I've owned my business now 24 years, and this is like my only career. And I can say, I think I would probably be a little bit lost without my business. So.
Yeah. And for me as well, you know, my clients are the same way. When I transferred here from Manitoba a number of years ago, and I had to give up some of the clients, it was emotional. For me, because I like developing those types of relationships. So it's certainly that way with a lot of business owners and sellers as well. Yeah.
Well, I think that's all we have time for today. Thank you so much, Ty, for sharing the buying process in regards to the accounting side of things and the due diligence. So I really appreciate your time. I know you're super busy. I'm going to share your information with our audience. If anybody needs accounting services or want to do their financial due diligence, Ty is a great accountant with a very reputable firm that can help you out. So I will be sharing Ty's contact information. So watch out for that email. Thank you, Ty, so much.
Thanks, Pam. Appreciate it.
Okay, we'll talk later. Bye-bye.
All right. Bye-bye.
Hi, Rashesh. Welcome to our podcast or to our webinar.
Hello, thank you. Thank you for having me.
So we're being joined now by Rashesh Mandani. He's from Mandani Law, and he's going to talk about some the legal aspects of the disclosure process or the due diligence process when buying a business. So, what is involved when somebody is buying a business and they need to do the due diligence?
So there's 2 ways to buy a business in Canada generally, or even in other countries as well. Generally, most franchisees would do an asset purchase where you buy the assets of the seller's business. So meaning all the equipment, ideally the contacts and business relationships that they have. And basically you're just stepping in and buying up all of the assets of the business, but not the obligations of the business. So you're not touching the books of the business. You could take on their employees, but there's usually a process for that where the seller would terminate their employees and you would rehire them under a new contract. The other way is to buy the shares of a corporation of the target business. So that involves where that's where the seller is a corporation and you're buying all of the shares of that business. So a share purchase agreement or a share purchase transaction is much more complicated than an asset purchase because you're now responsible to have more due diligence. So I'll touch on the due diligence on both sides, but just on the share purchase aspect, you have to basically look at everything with regards to the business. You're now responsible for you have to make sure the CRA is paid, because if the CRA isn't paid, they'll come after you because now you own the business. You now need to look at property taxes. You now need to look at WSIB, all sorts of employment laws, pensions. You literally have to look at every stone. You have to turn every stone over and see what is this business about and what's involved with the business. So obviously the legal costs are a lot higher because the due diligence is far more intensive. But when it comes to an asset purchase, we're mainly looking at, are there any liens on the property? Usually a PPSA lien in Ontario, which is a Personal Property Security Act lien, which means they have a loan with the bank. They might even have a loan with the franchisor, which has a lien on the property. So if the property was sold to you and that lien isn't lifted, you're out of luck, because now someone actually has priority over that property over you. So when buying that business, first and foremost, we always make sure that, if we do find any liens, we make sure the seller's lawyers promise to remove those liens using the money from the closing. Other types of searches that we usually do, like clients will get appraisals to understand what's the value of what they're buying. So that's a big question when it comes to buying a business, is what's the business worth, right? There's many different ways to value it. When it comes to an asset purchase, there are certified valuators that can give you an idea of how much the equipment is worth. Obviously, you want to know about warranties, the state of the equipment, how old it is, things like that. And then when it comes, sorry, go ahead.
I just have a quick question. So we're talking about assets, transfers, or shares. So what would be one of the reasons why someone would choose to do a buying the shares of the company as opposed to just the assets of the company?
So in certain situations, there is a better tax advantage for sellers when it comes to a share sale, because they can take advantage of certain tax deductions. There's lifetime tax deductions that they get, so they can save quite a bit of money on taxes. I can't advise on tax just because I'm not a tax lawyer. But with regards to the share sale, there's also another reason where the buyer might want to buy have a share purchase, is because, say, the business is very complex and has many different relationships and many different contracts, or it has established relationships with large customers. So the buyer may just want to step into the shoes of that business. So for example, I did a Hyundai dealership. My client bought the shares of the seller, and just stepped into the shoes and worked with the franchisor, Hyundai Canada, to basically continue on the business. So there's a better chance of continuity and ensuring things kind of just move along, because at the end of the day, the person that's the company or person, a company is a legal person in law, they're running that's running the franchise, and by you just stepping into the corporation, nothing really changes for the public or most customers. It's mainly a change of control.
Okay. That's helpful.
Yeah. So, and then in terms of like a franchise, so most franchisees, because I know a lot of people listening here today are likely interested in buying a franchise. Most times it'll always be an asset purchase, where you're just buying the assets. The only other main things when you're dealing with an asset purchase are, you need to know, like, if they have the WSIB account, we get a clearance to make sure that they met their WSIB requirements, because employment law, the employment law doesn't really care who buys the business. They'll have the obligations flow to the next owner. So with regards to the CRA, you don't really have to worry, because you're not buying the company, you're a separate entity. But when it comes to WSIB and employment standards, you have to make sure that they've met their requirements and that they terminate their employees properly, so it doesn't flow to the new owner. But the biggest thing would be the liens on the property, and then also the disclosure requirements. So a big part of buying a franchise is you have to get the approval of the franchisor to join the system and say, hey, I want to buy a Baskin Robbins, and I'd like to be, I'd like to buy this store from this person. But the franchisor has to approve you and say, yes, we think you're going to run a good store, and we think you're going to be a good franchisee. So as part of that process, they're going to give you a franchise agreement. But prior to that, even if part of the package, it's called a disclosure package. And basically part of disclosure is they have to give you all the material aspects of the business upfront. They need to inform you by law that, you know, these are the people that run the business. This is the amount of experience they have. How many stores do they have in the territory you're in or across the country? How many stores have been opened in the past few years? How many have been closed? Why have they been closed? They'll also give you a list of all of the current franchisees, so you can actually call them and reach out to them and ask them, hey, what's your experience with this type of brand? Have you been making money, right? Has it been good for you? So all the material, important facts that the potential franchisee needs to know in order to buy that business is what's part of the disclosure. So they'll tell you all sorts of things like what's the limited territory of the store, like how, you know, do they guarantee you a territory? And then also part of that, they'll show you an example of the legal documents. So usually when you have the disclosure documents, it's strongly advised that you speak to an accountant and you speak to a lawyer to have these documents reviewed so you can understand them and you understand what you're getting involved with.
Yeah. And I think so many times people are trying to save a little bit of money and not spend the extra few dollars on the lawyer or the accountant. But I think this is such an important part. So many people just go and sign a franchise agreement, and parts of the franchise agreement actually can be negotiated. Not everything is like set in stone in that franchise agreement, even though I'm sure many franchisors would like it to be somewhat set in stone, but some of the aspects of the agreement can be negotiated, can it not?
It depends franchisor to franchisor. So like, for example, sometimes franchisors may renegotiate the territory. You can say like, hey, I'd like the territory to also include certain areas of, you know, beyond the certain territory, because you know that there's like schools or, you know, there's certain businesses that will feed your business. So obviously you can have those discussions and have edits. And going back to your point about, you know, trying to save money, I see this all the time. So I always give people the example that, you know, if your roof was falling apart, you can save money by going to Home Depot, buying your own shingles and going onto your roof and start doing it. But why don't you do that? Because of risk. No one wants to fall off the roof and get injured. It's the same thing when you have an accountant and a lawyer at the early stages of when you're buying a business. The lawyer and accountant are legally liable to help you and ensure that you're protected. And they do their job thoroughly to ensure that you don't have surprises later on. And in the legal industry, surprises, so the type of lawyer I am, I'm a solicitor. So I do mostly contractual documents, paperwork. The other type of lawyer is called a barrister, which they go to court all the time. And they are going to court because people have a dispute because they couldn't come to a solution. So yeah, those types of lawyers charge far more than what a solicitor would charge you up front to make sure you don't have any hidden surprises. So it's very important to make sure you do have a good lawyer, a good accountant that knows what they're doing, that can give you proper advice, so you know exactly what you're getting into. Because once you get far into it, you can't go to a court and say, well, I didn't know what I was signing. The court's going to say, hey, you're a commercial party. The franchisor is a commercial party. You signed this document. You had 2 weeks to look it over with the lawyer. You chose not to. Now you know that you've agreed to it. So they're not going to touch it.
Yeah. And when you're making that big investment of $200,000, $300,000, $400,000, it could even be $1 million or more for some big franchises. You know, you want to spend the few $1,000s that is required to make sure that you are protected. It's for your own protection.
Totally. And people don't understand that, like, these are parts of your business as well. So like, if, let's just say, like a lawyer or accountant finds a red flag in the business, they could potentially save you tens of thousands of dollars of headache and pain because they spotted something early on, right?
Yeah.
And a lot of the expenses that you spend, or I think all of the expenses you spend on accountants and lawyers, are generally tax deductible towards your business anyway. So you're going to put it towards your business at the end of the day.
Yeah. And you just want to make sure that you're protected, because it is a huge investment. And sometimes it's, you know, your entire life savings. So you want to protect that investment and also all your time that you're about to put into this business. You don't want to waste 2 years and end up in a lawsuit with anybody.
No, and lawsuits aren't guaranteed. It's like you
Yeah.
may think like, oh, I have a really strong case, but when you get to court, you don't know what type of judge you're going to get, and it costs tens of thousands of dollars to go to superior court. Superior court is for any lawsuit over $35,000. But again, you don't want to go down that road. It's
No.
better to know up front, what am I getting involved with? Is this a franchisor I really want to work with? Because generally, franchise contracts, franchise agreements, they're generally weighted heavily in the favor of the franchisor because they're the ones setting up the system. They're saying, hey, you want to be part of our system? These are the rules, right?
Yeah.
Sometimes those rules are, fair. Sometimes they can be unfair, depending on franchisor to franchisor. There's no limit in terms of what can be written in those documents. As long as they've told you the material facts and you had the time to go to a lawyer and accountant and you agree to it, then that's what goes when it comes to the law. But if you go through and you say, look, this is not the right franchisor for me. I've called a few franchisees. They said that they had some trouble with this franchisor. Like, I'll give you an example. I'm not going to name names, but I've had clients come to me where they say, hey, I have a bunch of franchisees. We're all really upset with the franchisor because the franchisor's collecting 5% in advertising fees, but we're not seeing any ads. So what do you do there? You have to go to court. Or I had another situation where a franchisor was basically charging a lot more than reasonable when it came to supplies for food and for vegetables and meat. So the franchisees were really annoyed that they're paying so much more to the franchisor when they could just simply obviously source it a lot cheaper in the regular market, but they're not allowed to because of the franchise agreement.
Okay. So I think, if you talk to a professional that would know this is industry standard or this is really outrageous, you need to be careful. And also speaking with existing franchisees would be super helpful to find out some of the issues within the system, if there are issues, or are these happy franchisees that are making lots of money, which there's many systems where you have lots of happy franchisees that are successful.
Correct. And the other thing is, like, you might have a newer franchise or a new franchisor that's out there that has a new concept, but doesn't have a lot of franchisees. Then I would say it's even more important to talk to a lawyer and accountant to make sure, like, what's the financials of the business? Is it actually a viable business? Are they actually making money, right? Even if they have one or two stores to start. And then legally, we would make sure, like, do they actually have trademarks? So why would someone want to buy a Tim Hortons or a McDonald's? Is because they have such a big name. So those names are trademarked with the trademark office in Canada and the US and around the world. And what that means is those images, like the logo for the golden arches, the name, the slogans, all of those things are protected by law. So you're allowed to use them under license as a franchise, but under a new franchise that's just been developed, if they've come up with the logo or come up with a name, but they don't have a trademark, there's a strong risk that you get involved with this business and all of a sudden now you got to change the name because they got sued by someone else who has that name.
Yeah. And I think a lot of patent lawyers and trademark lawyers would recommend not to franchise your business until you have your registered trademark.
Yeah, because what else are you, like, the whole point of the franchise is you want to get involved with, like, rather than me opening up my own burger shop, I want to buy a Burger King because I know Burger King has the recipes, they have lots of advertisements, they have a brand that's well established, they have logos. That's what I'm paying them to be part of this franchise. But if the franchise is new, they don't have trademarks, they don't have anything registered yet, or it's in the process, there's a strong risk that you invest in this and then it turns out they get sued. And then now all of a sudden you've invested all this money, you put up signs, you got uniforms for your staff, but now you got to change all of that because their name is not valid anymore.
Yeah. And that's why you want to have a good lawyer to review these things so that you're protected.
Definitely.
And, I know, like, leases on businesses that are location driven are super important. So what kind of recommendations do you make about reviewing the lease, and how important is the lease to a business?
So especially when it comes to franchises, a lot of franchisees will get a loan from a bank. Banks will usually want to see the lease have probably about 10 years minimum. If it has less, then you have to negotiate that with your bank, but usually banks would want to see quite a long term so they can amortize the loan for what you're borrowing basically to the loan. And then the other aspect of the lease is generally most franchisors will actually be the lessor, or like they'll be the tenant under the lease, and then the franchisee is the subtenant. So in that case, the benefit of that is you don't have to negotiate with the landlord and say, hey, look, don't increase my rent or whatnot. The franchisor usually has more power than you because they have many stores, or they've worked with RioCan or Cadillac Fairview in multiple malls, and they have some bargaining power to say, hey, well, you know what, keep our lease terms fair for the new term that's coming up. So but the only thing is now, whatever the franchisor has negotiated for you, you have to abide by. So you basically step in as a sublessee. Some franchises, they say, well, you go find the location and we'll let you know if we agree to it. And then you have to figure out the lease. So yeah, so when it comes to commercial leases, if you're going to negotiate it yourself, the big thing is you really need to have a lawyer involved, because commercial leases are not like landlord and tenant leases when it comes to people's personal leases where they live. They're considered commercial contracts. So generally, commercial leases are weighted heavily in the favor of the landlord, and you have to be very careful. Some landlords have language in their leases that are very unfair to the tenant. And if you don't spot these things and you simply sign it, and you find out this problem 5 years into the lease, and you're like, hey, I didn't know I agreed to this. No court's going to help you, because the court's going to say, hey, you're a commercial party, they're a commercial party, you both agreed to this, we're not going to touch your contract.
Yeah.
So, but when it comes to landlord tenant, when it comes to like a personal lease, there's a lot of laws to protect tenants, because the law doesn't want people to end up on the street. So there's a lot of protections to make sure landlords don't abuse or misuse the rights of tenants.
And I mean, one of the things right now that people are aware of is that, okay, I'm leasing a house, I'm leasing an apartment, and they can only increase my rent yearly by X percent, if it's 1% or 2%. But it's a low number. Now, when a commercial lease expires, I don't think that's the case. Just from my experience at my office, my rent, when it came to renewal, jumped up 25%. And they said, well, that's market conditions today. So maybe you can touch on that a little bit.
Sure. Yeah. So basically, when it comes to commercial, so when you talk about personal leases between landlords and tenants, that's governed by law in terms of rent increases. So the law will say, in Ontario or even a municipality may have rent control, and they say, hey, for all rental places in the city, generally in the province of Ontario, it's provincial, they'll have a limit that'll say, like, this is the maximum that you can increase rent. When it comes to commercial, once that lease is terminated or it expires and does not have any further renewals, you have to renegotiate a whole new lease. And if your landlord says, hey, I want, like twice as much as you previously paid, then you got to negotiate that. Unless you had a renewal where the renewal says, hey, because usually renewal language in a lease will say, okay, this lease is for 10 years, but there are 2 renewal periods of 5 years each. And in each renewal, we'll discuss the rent, but it'll be the fair market rent for a similar size and a similar place in this area. So they'll go to like an appraiser or a realtor and figure out what's a fair rent for base rent. But there is no guarantee that the rent will stay the same. So ideally, a lot of times when franchisees want, that's what, going back to my first point, is they usually want to get a longer term lease. So you actually have, you have certainty as to what am I going to be paying for the next 10 years for my rent, right? So then that way you can actually kind of calculate in terms of how the business will be, how you amortize the loan, and how are you going to run the business? How are you going to like make sure you have enough money to pay all your expenses?
So is there any value in buying an established business where the lease is just about to expire, or is that business kind of worthless without a lease?
Well, you could buy it, but then I would say that the deal has to be conditional on you getting a fair lease that's acceptable to you. So you'd want to make the deal conditional, saying that, hey, if I can't get a good lease, then I would like to back out of this deal. So it's contingent on me being able to negotiate a fair lease in my satisfaction, or to my satisfaction, with the current landlord. And I have, 90 days from the date of signing this agreement. So within those 90 days, you can say, hey, look, I talked to the landlord. They're not willing to work with me. I'd like my deposit back. Thanks.
Okay. Okay. And what about if they have any or looking into any potential lawsuits? Because you don't want to be buying a business and then all of a sudden finding yourself, as soon as you open the door in a lawsuit.
Correct. So part of the searches that we do when we do due diligence is we do a lawsuit search, and we check courts in the area to see if there are any outstanding lawsuits or judgments against the seller. Because if there were, then potentially those assets could be subject to being liable to be part of repaying a debt. So with regards to, but it's more of a concern when it comes to a share purchase transaction, because you're stepping into the shoes of the corporation. The corporation hasn't changed. So whoever's suing that company, they're going to continue suing that company. The fact that its ownership has changed doesn't really matter to the person suing the company. Right? Unless they're suing the principals of the company individually as well.
Okay. So I know a lot of, or not a lot, but a certain percentage of businesses, they are being sold ideally with a property. So the previous owner owned the unit that they were in, and they're selling the business and the property that goes along with it. So what kind of due diligence do we need to do on that kind of transaction?
So with regards to the
buying an established business that is being sold with property. Yeah.
And that the seller owns the property.
Yeah.
So when a seller owns the property, then what we would do is we would also look at it in terms of a real estate transaction. So we would want to check for mortgages on the property, liens on the property. So your lawyer can obviously make sure, if you're doing a share purchase, you can also get title insurance along with the share purchase, where it includes the property ownership. And that title insurance will protect you for certain searches that the lawyer doesn't need to do. But generally, the lawyer will obviously pull a title search from the Ontario government. And basically, they will see and check if there's a mortgage, they'll ensure that the seller's lawyer will promise to remove that mortgage using the funds of the sale. And usually we'll ask for a discharge statement, like a mortgage statement, to say, hey, how much is outstanding on the mortgage? And we would want to make sure that the amount of money that we're giving them for the sale is enough to cover that. Because if it's more, then obviously they can't get rid of that mortgage.
Yeah.
And also we would look for like liens, if they have any utility liens, like they have a hot water tank rental or something like that. They may have a lien, or they're financing equipment. There might be a lien on the property. So all of that we would ask them to remove. So it would just be additional searches that are involved in that. And then obviously the client needs to understand the state of the building, what repairs have been done recently. Just like if you were buying a house, you would want to know, like, when was the roof last repaired, or are there any issues in the foundation? You'd have to do your due diligence in terms of investigating the state of the property.
Okay. So I think that's all we have time for now. I'm sure we could talk for probably a couple of hours about this topic. So I really appreciate your time. I know you're super busy. I'm going to share your information if anyone wants to get a hold of Rashesh. I think you had mentioned earlier to me that you are able to provide a 1-hour free consultation. Am I right?
Yes, that's totally fine, and we're happy to answer any questions that we can. And and even if clients don't, if they need someone to help trademark, or they need a good accountant, we can also help refer them to people within our network too. So yeah, we'd be happy to be a resource to everyone here today.
Okay. So anyone who's been on this webinar will share Rashesh's information, contact information, and you have a free 1-hour consultation with his firm. So thank you so much. I really appreciate your time, and we'll talk soon.
Yes. Thank you, Pamela.
Okay.
I appreciate it.
Thank you. Bye.
All this value information is just the part 1. So wait for part 2 to have a full idea about how to buy a business in Canada. If you like it, please like, share, and subscribe to see our upcoming episodes.